Good afternoon, this is Sean Golden with Golding & Golding, here to discuss the basics of what do you do if you're a resident of Puerto Rico. Do you have an FBAR reporting requirement? Let's start with the basics real quick. What's the FBAR? Foreign bank and financial account reporting. Not limited to just bank accounts. It includes bank accounts, life insurance with a surrender value, investment accounts, pensions, things like that. If a U.S. person, which is a U.S. citizen, legal permanent resident, foreign national who meets the substantial presence test, if at any day during the year they have more than $10,000 in annual aggregate total in all of their foreign accounts combined, they have to file the FBAR. Doesn't matter if you have ownership, co-ownership, signature authority, no financial interest in the account. The IRS wants to know about it, so you have to file the FBAR. What happens if you're a resident of Puerto Rico, right? Puerto Rico is a commonwealth, not technically a state. There's some U.S. tax requirements. Depending on if you're a resident of there or not, you may be able to avoid it. Basics, right? Puerto Rico, considered a commonwealth. If you're born in Puerto Rico, you're typically considered a U.S. citizen. For FBAR filing purposes, if you're a resident of Puerto Rico, you are required to file the FBAR. So, and for reference, you can always refer, I think it's publication 570, but if you're a U.S. citizen or legal permanent resident, then you have to meet the bona fide test in Puerto Rico. It's not the same as the substantial presence test. It's a little different, okay? There's 5 basic requirements that you have to meet, but it's not substantial presence per se. It's bona fide resident. Why? Substantial presence is for non-resident aliens who are trying to show, or don't want to show, but the IRS wants to show that they're a U.S. person. The bona fide residence test is for U.S. citizens and permanent residents who want to show that they are residents of Puerto Rico. For non-residents, it's typically the substantial presence test if they're in Puerto Rico, right? Because they're not a U.S. citizen or legal permanent resident, so it wouldn't be fair to apply just the Puerto Rico bona fide resident rules. Instead, they go by the substantial presence test. Okay, there's different deletions and insertions when you're doing the analysis under 7701, but at the end of the day, that's the basics. There's always exceptions, exclusions, limitations, yada yada, but something to keep in mind. One other important aspect, though, is just because you have an account in Puerto Rico, that's not reportable. So see, the IRS can't have its cake and eat it too. Well, it tries to, but it doesn't always work. So you can't claim on the one hand that if you're a resident of Puerto Rico that you are, on the one hand they're saying if you're a resident of Puerto Rico you're a U.S. person. So on the other hand, they can't say, well, accounts you have in Puerto Rico or other similar areas like Guam are considered foreign accounts. They're not. So technically, if you're a U.S. person and you had all of your accounts in Puerto Rico, guess what? You don't have to report those accounts. In fact, if you went through the FBAR and you do the drop box, there's nothing in there. Drop down box, excuse me. There's nothing in there for things like Puerto Rico and Guam because they're not considered foreign accounts. So what a lot of people will do is they will, if they're a resident of Puerto Rico, depending if they're doing Act 20 or 22 or now Incentives Code 60, which is used to avoid U.S. tax if you're able to minimize your income and source it all to Puerto Rico. But essentially what people will do is they'll move to Puerto Rico, open accounts in Puerto Rico and the U.S., and then it's not reported for FBAR purposes. Maybe they'll open it in the U.S. under an entity or something like that in Wyoming or Nevada. Okay, so that's the basics. If you're out of compliance for prior years, there's various amnesty programs that you can use to get into compliance. If you're willful, can't certify under penalty of perjury that you're non-willful, then you would do VDP, Voluntary Disclosure Program. If you're non-willful, you have a lot more options available to you. Streamlined filing compliance procedures, streamlined domestic and offshore. They both fall under the main moniker of streamlined filing. You can also do delinquency procedures or reasonable cause, which are pretty much similar after November 2020. We have lots of free information on our websites, Golding Lawyers. We have a bunch of sub-websites depending on the specific category that you might be interested in. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.